In today's news, for 6 years, XRP holders and other members within the crypto community have been talking about the fact that crypto could save the United States and their ever-growing debt crisis, and they've been accused of spreading FOMO and wild conspiracies. Well, I guess that also makes Wall Street a bunch of conspiracy theorists and FOMO spreaders as well, as the Wall Street Journal recently published a newspaper talking about how crypto could stave off a US debt crisis, talking about the necessity of stablecoins backed by dollars to provide demand for US public debt and a way to keep up with China and therefore the rest of the BRICS alliance. This is a very big deal, and considering Ripple are releasing their real USD, the RLUSD, a stablecoin this year 100% backed by the US government, this Wall Street newspaper is very bullish news for XRP. As always, XRP is in the right place at the right time, almost as if this was all pre-planned. The XRP will be worth thousands of dollars. In the words of Wall Street's biggest financial institution, BlackRock, their CEO Larry Fink stated, "This current financial system is over with. There is no saving it. New infrastructure is critical, more so now than ever before, and it's my opinion that assets like XRP will be leading this new revolution." Listen closely.
The IMF and the World Bank were created 80 years ago when banks, not markets, financed most things. Today, the financial world is flipped. The capital markets are the biggest source of private sector financing, and unlocking that money requires a different approach than the bank balance sheet model of yesterday. There's still a lot of work to be done, but reform over the past 8 months have resulted in billions of dollars of new dollars for the developing countries' infrastructure. That's what you saw last week with the announcement of the Investor Coalition. BlackRock, GIP, KKR, and other major firms will deploy $25 billion in Asia's emerging economies. In a way, it's an Indo-Pacific counterpoint to Italy's Mattei plan, which is helping African economies grow, and that's important. Every country in the world needs a growth strategy. But if I could convey one more important message today, it would be the countries that need growth most right now are not just emerging economies. Great economic powers, including the G7, are in fact on the list and need growth going forward. All of us are staring down a growth dilemma. Whether we solve it or not, it's a significant economic fork in the road for our countries. Today, the G7 average debt to GDP is 129%. No matter how much we tax, how much we cut or reduce that debt, it will not be enough. The only way we can achieve this future of growth is by truly growing out of it. But just growth is becoming more important because we need to be focusing on our fiscal health. It is also becoming much more difficult to achieve. Within 25 years, most of the G7 countries will be on demographic downslope. Working age population will decline. The ceiling on growth will get lower and lower. This is why building new infrastructure is critical, especially through public-private partnerships.
Now, BlackRock, on the surface at least, are the ones leading the developments in this new revolution. The Texas Stock Exchange has successfully secured funding at $120 million backed by BlackRock and Citadel to launch a fully digital stock exchange. It is expected to be the most well-capitalized and most liquid exchange in the United States, a new world for tokenized assets, which is massive news. However, what BlackRock is doing on the surface in front of the world, Ripple have been doing in silence, behind the scenes, from the shadows, laying the groundwork for building this new financial infrastructure. Ripple is the only distributed ledger technology company, DLT company, on the US Federal Reserve Faster Payment Task Force, and JP Morgan is a representative of the committee with them, alongside IBM, Goldman Sachs, Citi, Barclays, BNY Mellon. You get the picture. Ripple is deeply connected. Furthermore, we have confirmation here from Ripple CEO Brad Garlinghouse that they are working with 10 governments around the world on CBDCs.
That is, Ripple has invested and is working with about 10 different governments around the world to do central bank digital currencies. I mean, a central bank digital currency is a stablecoin. It's just issued by the government.
Now, considering how evidently deeply connected Ripple is to the leaders of this world, This is why the new RLUSD and why XRP will be successful. Ripple are even connected to BlackRock. BlackRock's head of digital assets, Rob Mitchnick, used to work for Ripple and was responsible for the creation of the XRP valuation model, suggesting that XRP could be worth thousands of dollars, but that is not all. Archax chose the XRP ledger and Hedera HBAR as part of their tokenization engine to bring real-world assets on-chain, two of the best enterprise-grade DLT solutions in the industry, and BlackRock, as you should know, is in partnership tokenizing US Treasuries on Hedera. Take a listen.
I know all you guys want to hear about is this new collaboration between Archax and Ripple, so let's get into the heart of that. What does it mean more broadly? And also, what does it mean specifically for all the XRPL users and developers here in the room? Why should everyone care? What do you expect to see in terms of types of assets and issuers on XRPL 12 months from now?
Yes, part of the challenge that we've had is that working with the traditional players is a challenge. So we've kind of gone down the route of build everything yourself. So we've got the custodian, the exchange, and the bit that was really obviously missing for us was the tokenization bit. Now, there's quite a few tokenization platforms out there, and we gladly work with all of them. But as they all charge per issuance, and I'm doing things like tokenizing the S&P 500, it costs you a fortune if you work with third parties. So we decided to build our own tokenization engine, and within that we built the functionality we think is needed for securities. And we've known the Ripple XRPL team for some time now, and we've always kind of liked the technology as well. So we've decided to implement it into our tokenization engine. So what that means in terms of a product is everything we're doing is available on XRPL. So every security that's already available through us. So we've already tokenized UK equities, UK gilts. Aberdeen own us. We've tokenized their money market funds, and BlackRock as well. They're all available on our platform now. And more specifically to the community, hopefully it means we're kind of more of a useful partner. So we already have XRP trading on our venue, so people can trade that in its simplest form. But if people want to create tokens on XRPL, they can do it with us. If they want to create securities, they can do it with us. If they want to custody them, we use Ripple Custody, formerly Metico, which is now all embedded within our system. So hopefully those that are looking to really work on the digital security space can partner with us and have easier access to RWA.
This is another massive connection to Ripple and the leading enterprise in this world. And as I mentioned at the beginning of this video, the timing of these developments, Wall Street's newspaper, Ripple's new stablecoin, all that BlackRock is doing, everything else, the timing couldn't be better. And as we can see from Professor St. Onge in this video here, gold is the second most popular global currency among central banks, ahead of the euro, but just behind the dollar. Most analysts of de-dollarization assume that some other form of paper money has to dethrone King Dollar, but what if the dollar slayer is right under our noses in the form of gold? Take a listen.
Since the 2008 financial crisis, central banks around the world have been buying thousands of tons of gold. In fact, 1 in 8 ounces mined was bought up by a central bank. There had been speculation as to why they are doing this, perhaps to hedge against a worldwide financial collapse that they are causing. Last year, a senior Dutch central banker actually admitted that's exactly what they're doing. Now, fresh data from the IMF says the central bank buying spree has taken gold past the euro, making gold the number 2 currency in the world, just behind the US dollar, going by central bank holdings. Now, this is interesting because most analyses of the dollar's future assume that some other paper currency has to dethrone King Dollar. Given that most currencies suck as bad or worse than the dollar, that gives a false sense of security. Because what if the dollar killer is staring us right in the face, good old gold? The tricky part is if transaction costs are the only thing holding up the dollar, those can disappear. Perhaps because the gold market grows sufficiently big, or perhaps some new technology like gold stablecoins that levels the transaction cost playing field. If that happens, the dollar's winner-takes-all reverses. It flips to gold. Well, at least it does for foreigners. Americans are obligated to use dollars by law. Thank you, Mr. Lincoln. If gold does dethrone the dollar, the biggest impact for regular Americans is, of course, inflation, because there are roughly twice as many dollars floating around the world that Americans need, meaning if foreigners dump dollars and switch to gold, all those dollars are coming home.
So gold may potentially become the asset, the next thing to replace the dollar, at least for the time being. As I mentioned and highlighted in a previous video, Jim Rickards stated that central banks don't want to go back to a gold-backed system, but right now, because of the dollar, losing its value, they don't have much choice. This is why central banks are buying up gold, but this will be temporary until they are ready to issue the next reserve currency, which will likely be digital assets. Tokenization is here, and we can see from Cyprus here, this shift is happening gradually, but then, when you least expect it, it will be sudden. And my opinion, assets like XRP will take over. Take a listen.
Quite simply, I think blockchains and digital assets are the future of finance, really, for many, many asset classes. Yes, the regulation needs to evolve and mature. And certainly there needs to be critical mass of both buyers and sellers and lenders and borrowers. But as more banks like ANZ get involved with the services I described around tokenization and smart contract provision, wallet infrastructure, if that's coming from a trusted counterparty like a bank, like ANZ, our customers are going to be much more inclined to reveal to themselves the benefit of fast settlement times, very low transaction costs. It's going to be gradual, then sudden. And I think that's the evolution. Now, that gradual may take longer than we hope or wish, but I do think there will be a tipping point.
And the reason why I believe assets like XRP will take over is explained in this interview with Ripple's head of DeFi products, Jazzy Cooper. Take a listen.
Take a look at traditional finance, and you have these clear silos across different financial institutions. And when open networks and Bitcoin, for example, were introduced, they were really intended to break down those walls, disintermediate and decentralize the financial system and allow for value to flow smoothly throughout the network. And so while that problem was initially solved with the introduction of chains like Bitcoin and the XRP ledger, as time went on and the number of blockchains continued to grow, and you now have L1s, L2s, Ethereum came on the scene and it just continues to proliferate. It's almost as if we came almost full circle, in that now we have new walls and new silos where liquidity gets trapped on each of these individual blockchains. So interoperability and infrastructure like that of Axelar and Layer 0 is a great solution to that problem, and it's finally going to allow for the transfer of value, so tokens moving between these individual chains that all have their unique advantages and reason for attracting users, as well as information through new technologies and advancements like general message passing. So I think there are kind of two clear benefits in terms of how this interoperability will unlock additional liquidity, and the first is market efficiency. So now that value can seamlessly flow between chains, you no longer are going to have the issue where a particular user wants, say, USDC, for example, but that token is not issued on a particular chain. USDC can be brought over by a bridge, for example.
So this is finally going to allow for the seamless flow and transfer of value. And once this change suddenly happens, all the world's money, which equates to over $1 quadrillion, all of the world's money will become tokenized, become digital, and assets like XRP will be used as a bridging asset. This here is the XRP liquidity cheat sheet, showcasing the value of XRP in relation to cross-border payments and the amount of tokens needed for liquidity. At prices ranging from $100 to $500, XRP could sufficiently handle daily payments volumes from $1 trillion, but this price becomes less feasible at volumes from $6 trillion to $20 trillion. This is because XRP's circulating supply of 55 billion would not be sufficient for the amount of XRP tokens needed to handle these volumes. And recall that financial pundit Shannon Thorpe previously argued that XRP would be undervalued at $500 if it locked in a portion of the projected $250 trillion cross-border payment volume. Vers Louise's sheet proposes that XRP would only sufficiently address daily payments volumes ranging from $1 trillion to $20 trillion if its price is at least $1,000. At a $1,000 price, the market would need to move 1 billion XRP tokens to account for a 1 trillion volume and 20 billion tokens for a $20 trillion volume. Ripple is deeply connected to governments, leading financial and technological companies, as I've showcased in this video. They have partnerships, over 500 that we know of so far, and they have the technology, the protocols, and this is why XRP has the potential to be worth thousands of dollars. There's not enough circulating supply, and the market's only going to continue to grow more and more, which is why XRP is destined to soar to the moon, and it will happen when you least expect it. So don't look short term, think long term, and I'll see you in the next one.